Hello and welcome to BloombergQuint. You are joined us in this conversation with Mr. Dinesh Khara, the chairman of State Bank of India. Of course, the bank has just announced its first quarter results for this financial year. Mr. Khara, welcome. Let me first quickly ask you about where this 6,500 crore profit is coming from. We understand that there's a very significant rise on the other income side. Provisions have come down, but the asset quality situation still looks a little, under the cloud because of the second wave. So if you can just take us through where these numbers are coming from, sir.
Yeah, sure. Yes, sir. See, when it comes to the interest income for the current quarter, it stands at 65,564 crores. The non-interest income is 11,803 crores. Our interest expenses are just about 37,000 odd crore. So, which means that the activity, and more so when we look at our retail asset book, that book is very strong growth, which we have seen about 16% odd. And similarly, when it comes to our yield on advances, of course, it has come down, but nevertheless, we have seen that we have ensured the right deployment. Our average cost of deposit is now at about 3.88%. So when it comes to yield on advances, it is about 7.3. 7 point, in the range of 7.3, 7.4. That is our yield on advances on the book. And when it comes to our yield on investments, that is at 6.10. So our total book size, if we will look at it, about 13 lakh crore is something which are the retail assets, retail advances. And incidentally, we are seeing decent growth in our overseas book also. Because, when it comes to the developed markets, there's a decent growth. And in this quarter, we have seen a definite traction when it comes to our international banking group. So all that has contributed to generation of this income. And on the top of it, our PCR stands at about 86% plus. And the aging provision being hardly any, our credit cost has come down to 0.79. So these are some of the contributing factors which has helped us in generating this kind of a return. Apart from that, on the stress book, we had decent recovery. Almost about 1,692 crore was on account of jet itself. So that also has contributed in the other income portion. And the fee income which we have from cross-selling, that is also almost about 900 odd crores. That is the kind of a number which we have. So actually, these are some of the key reasons for we having witnessed this kind of.
Okay. Quick commentary on the asset quality side, sir. Now, there we have seen a slight spike quarter-on-quarter basis in the gross NPA ratio. Your slippages are also higher, about 15,666 crore. What I'm trying to understand is, since retail and SME are pushing up this slippage during the current quarter, what is the outlook looking like, and what does this mean for the book, which is the loan book, which has actually been growing quite handsomely for you?
See, the slippages are at about 15,666 as on 30th of June. But here it would be worthwhile to mention that we actually started witnessing unlock situation only after 16th June. That is very important for us because, when it comes to retail, the pullback is essentially a function of the efforts. So it's effort elastic recovery, which is always there in the retail sector. And we have seen that in about from after 16th June until now, till end of July, we have pulled back almost about 4,700 crore plus out of this. So if you reckon, if you knock off 4,700 crore out of 12,666, so actually that will give us, 15,666, that will give us a very clear reflection that we are actually at about 10 to 11,000 crore kind of a slippages only. So if we go by what we mentioned last year also, that we will keep it within 60,000, I think we are much on track for ensuring this. And as far as the corporate book is concerned, we are adequately provided for. And whatever potential stress is there, that we have since provided. Another aspect which I must bring it to your notice is that we had about 6,000 odd crore provisions for COVID as at the end of last financial year. And as at the end of this current quarter, this number stands at about 9,000 crore. So, which also means that this is the cushion available going forward for the potential and the likely stress which might come in the way. And we will be in a position to keep our balance sheet fairly insulated.
Okay. I'll come to the credit growth part now. You've guided for a 9% credit growth during this financial year. You're expecting to reach that. What I am trying to understand from you is, while the retail side of the story is strong and that is still growing, on the corporate loan book, largely banks have depended on the bond market to deploy the funds that they have. Do you feel that the corporates are now deleveraged enough to start another cycle of bank credit, or do you also, what do you see in terms of growth?
I think when it comes to the corporate credit, it will be something which will be a function of the real economy also. As I was mentioning in the press meet also, we have seen that large corporates, there is underutilization as high as about 40%. But yes, when it comes to the mid corporate, we have seen that underutilization used to be about 30%. Now it has come down to about 25% and odd. So I think as the economy looks back, as the economy rebounds, as the demand comes back, there would be an opportunity for us to grow in the mid corporate segment also. And I'm quite hopeful that the way the vaccination has happened, almost about 48 crore people have already been vaccinated. So to that extent, we have sort of created a safety net for the people, which will probably go a long way in terms of building the confidence and the courage for the citizens in general to come back to the economic activity. And once the economic activity is back, I'm quite hopeful that we'll get to see a decent growth in demand, and we should be in a position to achieve the kind of credit growth number which I've indicated.
Sure. Do you have any large pipeline? I know the last time you mentioned that there were plenty of borrowers waiting in line. What is that looking like for this quarter?
No, this is equally handsome and equally strong pipeline exists even now, and it is somewhere. It is about 2,50,000 crore is something. Do you have the number? Yes. Okay. The pipeline में जो है नहीं proposals. Proposal तो 1,32,000 1,32,000 is the SBI and CAG number. These are the new proposals, and the underutilized is about 2,50,000 crore, and 1,32,000 crore are the new proposals which are in pipeline. So proposals, I think what is happening is that we have generally seen that investment demand coming back is one of the major functions for the credit growth to pick up. Unless and until that happens, there is going to be a challenge. But yes, of course, we are seeing that when it comes to the government sector, which is essentially supporting the road and the construction sector, there we are seeing some traction, and we are supporting any such activity which is any such proposal which is coming in. And essentially these proposals also which we are talking of, they are coming from there only.
Okay. The last question that I had was with respect to the retail side of the story. Now, we've seen slight pickup in the home loan slippages. Now, you said that this is a transitory sort of phase. Things will improve as the economy picks up again. But any lessons that you picked up? There was a huge pace of huge rise in loans towards these secured retail assets over the last few years. Now, during COVID, we've seen some of that slippages come in. Anything specific that you picked up that you will probably be more careful towards the next cycle?
No, actually, see, the point is that I would only say that it is all function of there's nothing special to really pick up. What really got impaired, it is not the underwriting which really was under challenge. It is actually the collection effort, and collection efforts are also impaired on account of the inability of the people to step out, which was, I think, is beyond anybody's reach, beyond anybody's control. So I think we have to really keep an allowance for such kind of things to really happen. And our effort and endeavor would be that we should be in a position to have the ACH invariably we are trying, and we should be in a position to see that people have more consistent cash flows. But nevertheless, banking is a business which requires taking calculated risk. So long as we can manage the risk, that is fine. So I think in the current situation, what we have seen is probably the worst of the situations in terms of the recovery. And hopefully, if at all the health and hygiene issues get addressed and the mobility is not restricted, we don't see any challenge to our portfolio and home loan.
All right. Thank you so much, Mr. Khara, for joining us on this conversation.
Thank you. All the best.